Trading is a game of probabilities, and like most other games, there are cheat codes that you can use which are going to help you win. So today I'm going to share with you a cheat code that actually got me profitable. So let's get right into it. Now, for those of you that don't know, I'm very briefly going to go over the bare bones of my model. So in a bullish example, I'm looking for price to take out some kind of level of sell side liquidity and then build up some bullish order flow, which is where I navigate my entry to then go and target some kind of buy side liquidity. Okay. And then in a bearish example, for instance, I'm looking for the same thing but opposite. So for price to take out some buy side liquidity and then build that bearish order flow, which is where I'll navigate my entry to target some kind of sell side liquidity. Right. So that is my model. And if you trade similarly to me, there are going to be obstacles in the way of you and profitability, which this cheat code that I'm about to show you is going to fix. The first of these obstacles that's going to get in your way is price will set up a perfect example of the model, right? We take out this level of sell side liquidity, price then builds bullish order flow, right? We have a CSD here that you could have entered off of, followed by a propulsion block. You could have entered there, followed by another propulsion block. But you can see that we don't actually reach the buy side liquidity and price fails. So if you had entered, for instance, off of a propulsion block, then you would have hit stop loss, even though it's a perfect example of the model. Now, you may think that this one is just part of the probabilities, but with the cheat code I'm going to show you, you'll be able to avoid a lot more losses, this one included. Now, the next obstacle that you're going to run into is not maximizing your profits. So you can see here another perfect example. We take out this buy side liquidity, price then forms a bearish CSD, which was actually a great entry opportunity. I actually took this trade and entered here. And then when it comes to your targets, right, you're going to take the majority of your profits at this sell side liquidity. However, a lot of the time you'll see price is going to run a lot further than this. You can see we run all the way down here, doubling the risk to reward. The cheat code that I'm going to show you is going to help you capture more of these profits. I'll put the execution screenshot on the screen actually so you can see that's exactly what I did. This last obstacle I'm going to help you overcome is a little bit different. So without what I'm going to show you, you would be looking for a trade at all times of the day. So from this black line onwards, that's every 15-minute candle within a day that you would be monitoring, looking for this model. And it's actually going to hurt you in the long run if you do this, whether that is from complete exhaustion or simply you're going to be over trading, right? Your frequency is going to be way too high. So yeah, what I'm going to be showing you is going to actually give you specific time windows to look for this model within, where there's a higher probability of success and you're not going to waste time and you're going to be able to save energy. Now, this brings me perfectly into what I wanted to show you today. The cheat code I use to overcome these obstacles is time and price alignment. So not only am I looking for that model I showed you, but I'm looking for that to play out within specific windows of time. Now, if you were to go ahead and study London kill zone and New York kill zone, which is this purple box and this orange box, you'll see within these time windows, price sweeps liquidity and runs to liquidity targets. We'll go over a couple of examples, nothing too crazy. We sweep out this old high, and then we go for this liquidity target within London kill zone. If we go ahead and look at this New York kill zone, you can see we sweep out this old high and then run to this old low. If you go to this New York kill zone here, you can see we sweep out this old high and we run to this old low. Now, given that a liquidity sweep and a run to liquidity is the main basis of the model, it makes sense to operate within these timings and these timings alone. But how was I actually able to integrate these timings with my model perfectly in order to fix the issues I showed you earlier, increase my win rate, and ultimately get funded to be a full-time trader? For this, I use daily cycles. Essentially, they are frameworks which seamlessly integrate my model that I showed you with the key timings we just looked at. And I have about 8 of them that I use. And today I'm going to show you one that you can take away and implement straight away to actually boost every aspect of your trading. So the daily cycle I'm going to be showing you is called London Protraction Cycle. Let's go over the cycle and how it actually implements the model with timing. So we're looking for a liquidity sweep first of all. This liquidity ideally is going to be generated in Asia kill zone. So we wait for Asia to play out, right? We don't trade Asia. Ideally it consolidates, builds an old high, equal highs, relative equal highs, whatever you want to see. And we build liquidity and we wait until London kill zone. Then London kill zone should sweep out that liquidity and build bearish order flow, which is where you'll navigate the entry, right? So you have the consolidation in Asia, which builds a liquidity. Then the liquidity sweep we want to see in London, followed by the entry, and then we expect London to run to some other kind of liquidity, whether that's the other side of the Asia range or we reach further for a lower level of liquidity. And an important thing to remember is this London kill zone should be expected to run until the last hour, which is going to be 9 to 10 a.m. UK time, right? So it should run until between 9 and 10 a.m. Now, if we go ahead and look at a bullish example, what we're looking for, again, is Asia to consolidate. Asia should build up some kind of liquidity. It doesn't matter whether that's equal lows, whether that is, an old low, relative equal lows, whatever you want. Wait for it to build liquidity, and we don't trade. We then wait until London kill zone takes out that liquidity, right? We take out that Asia low, and then we look for the entry. So we look for that bullish order flow to build, and we get the entry, and then we look for London kill zone to go ahead and target another level of liquidity. Again, this can be Asia high, or it can be a higher level of liquidity. Just like the bearish example as well, we're expecting this to run until the last hour, right? So between 9 and 10 a.m. UK time. Now, without a valid daily cycle framework, I do not trade because they present the highest probability trades. So I have no reason to take a trade outside of the 8 daily cycles that I use. So let's go over those issues that I pointed out before and how this actually fixes them. Okay, so that first example that we actually went over where price failed to reach the buy side liquidity, remember we took out the sell side liquidity, we had the buy side to go and target, and price did present a bunch of entry opportunities in this leg, right? We had a CSD here, followed by a propulsion block, followed by another propulsion block, but ultimately this bullish order flow failed, okay? Now, this would not have been an issue because if we actually put the kill zones on, you can see that this was within Asia kill zone. And we expect Asia, with that daily cycle I just showed you, to build up liquidity. And as you can see, that's all price did, right? We built up liquidity. You can see here, we have relative equal lows that were built up within that kill zone. So yeah, you wouldn't be trading this. You would be expecting price to build liquidity, and that's exactly what happened. And then if we actually go ahead and zoom out a little bit and put London kill zone on, you can see we still have this buy side liquidity intact, right? And you can see that London kill zone opened up and we took out these relative equal lows. So Asia built up that liquidity, London kill zone took out the lows, and then we, on the lower time frame, form a 5-minute CSD, right? We form this bullish order block here, right, which was respected. Then we build this bullish propulsion block, which was respected. And this time, price ran to the target, right? We had the daily cycle aligned. So not only did price build the model that we're looking for, but it was within the daily cycle framework, which aligned it with time, which gave us a higher probable trade, which is why price went ahead and ran to the target. And like I said, we can expect price to run until the last hour of the session. So potentially hold until between 9 and 10. So you would have got out anywhere, within this area here above the liquidity target. So you would have easily been able to get at least a 1 to 2 out of that. So that's the first issue sorted. You're not going to get caught up in trades you shouldn't be in because of timing. You're going to use the daily cycles, and that's going to align you with the highest probable trades. Now, the next issue that we went over was not being able to maximize your gains. You can see here that we took out this buy side liquidity. We targeted this sell side liquidity, and the entry was off of this 15-minute CSD. And you can see how perfectly this fits the daily cycle, right? We have Asia session. It creates this old high, which is going to be the liquidity that we want to see swept. London kill zone opens up. That first candle, we take out this old high. We take out the liquidity. Then we get the entry, and price runs through the kill zone to the sell side liquidity. A perfect example of that London protraction cycle. However, if we didn't have the knowledge that price should run to the last hour of the kill zone, you would have taken all of your profits at this low. However, knowing that we can hold until between 9 a.m. and 10 a.m., you would have held much, much longer. And you can see that this here is 9 a.m., right? So you would have held until 9, maybe you held further to like 9:45, 9:30. Either way, you would have extended your risk to reward from a 1 to 3 to a 1 to 6. So by knowing that price should run until that last hour following the daily cycle, then you can maximize your profits, right? And again, I'll put the screenshot on the screen of my execution. You can see I held this trade for a lot longer than this level up here. Now, the last issue that I actually spoke about was simply wasting time, right? You're going to be wasting time. Your frequency is going to be too high, and you're going to overtrade if you're looking to trade within any window of time during the day. Now, implementing what I just showed you, implementing the daily cycles, you only ever operate in London or New York kill zone. So you're going to be operating, within these 3 hours in London and these 3 hours here in New York session, which is significantly going to reduce your time on the charts, your trade frequency, and the potential for your overtrading. Now, if you want to start learning about the other 7 daily cycles that I personally use for free, I'm going to leave a link to that in the description. And I've also broken down the model that I showed in this video into 4 simple steps, put it in a PDF that you can also download completely for free. A link for that will be in the description as well. I hope you found value in this video, and I will catch you on the next one.